Hi, Cheryl. How are you?
I'm good. Hi, Mike. Thanks for joining me.
Yeah, no, thanks for having me. Excited to be here.
Good.
I'm ready when you are.
All right, go for it.
All right, so good afternoon. I'm Mike Roberts with Expense Reduction Analysts. We help senior level business executives and owners to free up hidden cash flow within their supplier-based expenses. And I'm here today to present to you best practices to lower your business expenses and to improve cash flow in the short term and long term. So pretty holistic presentation here today. We're going to touch on a few different items in regards to uncovering hidden cash flow. The first would be the impact of a dollar saved and why that's important. Secondly would be short-term cash flow. A few different methods that we've used over the course of our 30 plus years in business, which is really centered around a three-prong approach. Next, we'll go into long-term costs and how to reduce those. We do have a 10-step methodology that I think is fairly helpful that will go step by step through that. And then finally, we'll look at actually analyzing supplier spend and what suppliers really don't want you to know in that space, how to go about an RFP practice, RFP best practice to make sure it's an effective process for you. And then finally, what the cost expense management continuum will look like. So with that said, we'll go ahead and dive right in. So this first slide really illustrates a hypothetical business situation, right? So let's just take a business that has about 100,000 in top line revenue. And let's just say for informational purposes, they have 35,000 in direct costs, 35 in labor costs, and 20,000 in indirect costs. After you take away the direct labor and indirect costs, you're left with a net profit of about $10,000. All right, so let's say we look at, and the reason we use 20% indirect cost reduction is that's typically what we average at ERA when we're doing a cost review for our clients. So let's just take, for an example, a 20% reduction in indirect costs. So that would lower indirect costs from 20,000 to 16,000. The net impact is 4,000 additional dollars that flow directly to the bottom line, right? So rather
Mike, can you give a couple of examples of indirect costs versus direct ones?
Yeah, sure. So a direct cost would be something like, let's say it's a steel manufacturer and they have, the raw materials that go into producing their steel, right? That would be a direct cost. An indirect cost may be something like waste. It may be office supplies. It could be freight, could be logistics, packaging, small package freight, chemicals, cleaning supplies, all the items not directly related to their primary core business, if that makes sense.
Absolutely. So that would then also include things like rental for your business space. It would be, insurance that you may have to pay, all the utilities, all those other things that aren't, you can't tie it directly to that product or that service and the cost it takes to actually provide that.
Exactly.
Gotcha.
Right. So those are the three key areas, right? You have your direct costs, which are directly tied to your core business, your labor costs, which is payroll dollars, and then everything else, like you said, Cheryl, is pretty much indirect costs, is everything else that you're left with.
Okay, so that business overhead.
Yep.
Great. Okay, I'm with you.
Okay, good. So that gets us to, so we're all on the same page with the 20% indirect cost reduction that goes straight to the bottom line. There's no expenses that come out of that cost reduction, so that goes straight to the bottom line. So essentially, a 20% cost reduction in indirect costs is equivalent to a 40% increase in net profit in this example. Okay. So based on the initial scenario before doing indirect cost reduction, to get to that same net profit, revenue would have to be increased by $40,000 to achieve the same $4,000 net profit increase, right? So, typically this is a point where I'll ask other folks, other business owners, how difficult would it be for them to achieve a 40% increase in net revenue year over year? And for most, that'd be really difficult, if not impossible, right?
Yeah. That's a huge difference. That's amazing.
A huge difference, right? But a 20% reduction in indirect costs as we've seen, is very achievable, right?
Yeah.
And that's what we've averaged over the 30 years we've been doing this in our business. So. All right, so if there's no questions on that, we'll jump right into short-term cash flow solutions. And these are some best practices, some thoughts that businesses can keep in mind when they're having short-term cash flow issues, right? Where can they go? What can they look at? Just some quick tips to keep an eye out for. So the first and certainly a low-hanging fruit would be apply for grants and loans, right? Depending on the type of business that you're a part of or the industry you're in, sometimes there's money available that could be finance free, and it's just a simple matter of going out and finding it, right? So that's something to speak to your tax professional about, to consultants about, right? Speak to your internal maybe controller about, to make sure that you're taking advantage of all the money that's available there. Especially from the government perspective. The ERTC is still out there. There was a deadline of March 1st that was extended, so now it's still possible to apply for the ERTC if you haven't. And again, that's another process that's fairly easy to review. Now, actually going through the process of the ERTC is not necessarily that easy. There's plenty of obviously firms out there. We've heard all the commercials on the radio about firms offering to take 15-20% and do that process for you. But the reality of it is that money is still out there, and many are able to apply for that. Even if you have not been eligible in the past, there's been some revisions to the rules, and so many businesses are able to qualify now that weren't in the past. So that's certainly some low-hanging fruit, right? Grants and loans. The second would be, hey, is there any money in your accounts receivable that just has not been collected? Is it past 30 days? Is there some efforts that you can take, either internally or using outside resources to go out and get that money? Are there any type of early payment discounts you can offer, right? Maybe it's a % here or a few percentage here to get people to pay inside of 30 days or even quicker, inside of 7 days, right? Maybe the last resort would be sell accounts receivable to a finance company. Obviously, they'll take a percentage, but what I always like to say is I know what 10% of zero is, right? It's zero, right? So if you're
Absolutely. You also have to factor in, how much are you going to pay your own employee to follow up on those accounts in order to try and collect? In the end, it might be a wash. Right.
And what are they doing? That's time away from other business activities they're doing, which may have, other impacts on the business. So great point, Cheryl.
Yeah, I think it's also important for people to consider, what kind of contracts and paperwork are they having clients sign when they come on board, so that you're positioning yourself that you can sell accounts receivable in the future, just in case. So, if you haven't addressed that part of your business, a call to an attorney is probably a good idea.
Great point. Can you pivot to generate income? Obviously this is really relevant during the pandemic. We saw so many businesses not just change their business model, but change their entire core business. Some folks transitioned to PPP in the height of the pandemic. Now, obviously we're through the height of the pandemic, but is that still applicable if you're in a scenario where you really have to pivot pretty significantly to generate income in the short term? Some smaller things, maybe less impactful, that specialized businesses can do. Restaurants, gift certificates are always a low-hanging fruit. Is that something where you can sell a gift certificate, $50 for $100 worth of restaurant credit, right? That's a great way to get short-term cash flow into the business. Let's say you're an auto dealer. You could review records. You can call up customers that have open recalls, overdue service intervals, an excuse to get customers in the door, right, and get some revenue flowing. And there may be scenarios where a sell or lease back of underutilized equipment or assets could also be some low-hanging fruit to generate short-term cash flow. Okay, so those are really the three-prong approach to short-term cash flow. Overarching is low-hanging fruit for grants, loans, accounts receivable. That's typically another low-hanging fruit. And then is there a need or an opportunity to pivot the business to generate some income, right? And just some ideas.
Can I add to that?
Please.
So, some other thoughts on ways to kind of pivot and generate income a little bit faster or more income is to look at your operations and what can you upsell. A lot of my audience are title insurance agents, and a huge one that they miss taking advantage of is selling enhanced policies, which is 10% more than the standard policies they typically sell. And even looking at your operations and your customer service model, and where can you work into your customer service ways that you can upsell your products or your services in a way that actually feels very friendly to your customers, because you are providing them with education, information, and just better service by informing them of what else is available to them.
No doubt. No doubt, Cheryl. Yeah, those are great ways to generate short-term cash flow as well. So thank you for sharing that.
Yep.
All right. So the next item would be, short-term ways to just slow down cash going out, right? That's also important in a time where cash flow is critical. So these are a few items that to keep on your radar in those scenarios. Accounts payable. We talked about accounts receivable, but how about accounts payable? Another way to slow down cash flow would be look at current payment terms and make sure you're taking advantage of it, right? If cash is an issue and you receive an invoice and you're paying it in 7 days and you have a net 60 AP policy, you're losing the float of 53 days, right? So that's something to keep in mind. Prioritize, negotiate payment plans or extension of payment terms. If cash is an issue, reach out to your vendors, especially those vendors that you have loyalty with and have a good payment history with. 9 times out of 10, they'll be willing to be flexible and extend those payment terms. So that's a good low-hanging fruit or place to start for short-term cash issues. P cards, another way of looking at it, a line of credit. Both methods have a way of extending out the payable and extending the life of your cash within your business. Consider paying your invoices with those. Pay off at the end of whatever the term is to avoid interest, just as you will with a credit card. But that's a way of increasing or really maximizing the float on your money. In more serious situations, request a deferral or forbearance if needed on loans, mortgages, rent, sales and property taxes, payroll taxes. These would obviously be in more dire situations, but something to think about is to consider all options, right? If cash flow is, a critical issue for the business.
Okay, I can add a little bit more to this as well. Again, a lot of my audience are very small businesses. So another option that may be available is credit cards with cash back. You put those recurring monthly bills on that credit card and you're earning that cash back. And then that may actually also buy you an extra 10, 15 days to pay off those bills, because they hit your credit card and then the credit card's not due till the following month. So that can also slow down that cash flow a little bit and get you a little bit coming back. And then a lot of my audience have escrow accounts, and sometimes it's possible to have the escrow account sweep into an interest-bearing account overnight, and that can generate a little bit of income as well to help keep things going.
Absolutely. Yeah, and there's so many different methods, right? These are not meant to be exhaustive, but just a few to keep in mind, right?
Yep. Every little bit helps.
Yep, it all helps. Short-term, lowering expenses. So insurance, that's a big factor, especially when you're looking at small businesses. Sometimes insurance can be one of the largest expenses. And one thing to keep in mind here with insurance is, not just making sure that you have the best coverage in place, but also making sure you have the best broker in place for the needs of your business. I think that's a really critical component of insurance. But what we touch on here is really making sure that your sales and payroll, that they influence your premiums, right? So one thing that you can do to, improve your insurance rating factors is to speed up audit terms, moving it from annual to quarterly. At times is a way to free up expenses and lower your expenses within the insurance space. Obviously understanding contract commitments is always important. Let's say you have uniforms, if you have waste management, which most businesses do, MRO supplies, so that's maintenance, repair, and operation supplies. You got to understand the contractual terms of all your agreements. Is there a way to lower minimums as far as uniforms are concerned? And waste, let's say you may have two 8-yard dumpsters outside. Is it possible to go with one 16-yard dumpster and review and change your pickup frequency from 6 days a week to 3 days a week, right? That can be massive savings. MRO supplies, a lot of times those are items like fasteners, bolts, different, manufacturing related supplies. And there's a ton of substitutes for those products, and they may not vary in quality, but it just could be a massive difference in price based on the supplier, right? So that's another way to try to extract some savings.
I bet office supplies kind of works the same way.
The office supplies is the same, right? I mean, there's not much difference in pencil quality, right?
Yeah.
Looking at various suppliers is a way to lower those expenses for sure. Discretionary expenses, what are your controls on discretionary expenses? How are you reviewing those? How are you approving those? I think that's typically a low hanging fruit, and sometimes in smaller businesses, those areas can lack oversight, right? And there can be some leakage in that space. Mortgages and leases, consider refinancing when lower rates present themselves. Obviously, this is not that type of environment, but you don't know how long it will be before that environment presents itself again. So for those that are locking in at higher rates now, obviously you want to keep your eye on the interest rate market, and when opportunities present themselves, take advantage of those refinancing when you can. Staffing, I think the best thing to think about with staffing is hybrid roles and really the most creative way to utilize man hours on the team to accomplish the goals of the business. We talked about insurance, but payroll is also a massive expense for small businesses. So, and the biggest expense. So, is there a way to combine a role, right, that's not a high degree of skill or expertise, to get the most out of those man hours, right, and reduce payroll? Is there a way to look at virtual? Is there a way to look at a virtual assistant? That has changed the way folks staff their businesses. So there's so many different creative ways to look at payroll to be able to reduce it, but it's something that shouldn't be overlooked, right?
Yeah, and also that difference between outsourcing versus insourcing. And sometimes it is cheaper to outsource things to people who specialize in that area, and other times it's cheaper to keep it in-house, and you really have to do that comparative analysis. Or it might be cheaper to train one of your existing staff members for some specialization that maybe you don't need enough of it. For example, maybe you can outsource your marketing, or maybe you can just get an employee who is already in-house to have some additional training, and they might be able to manage your social media account while doing their other role. So you really have to look at it both ways, because both solutions can be the right one depending on your situation.
Right. And it could be a mix of the two, right? As you mentioned. So
yeah.
Great point, Cheryl. Okay, well, let's transition a little bit from short term. Let's look at a little more long-term expenses, and we can go into some key strategies to keep those down, right, and to lower those. A lot of times these are a little more significant than some of the short-term implications. So with that said, let's dive right in. So I think the first and most important thing is to have a strategy, right? Just like anything, if you have a strategy and plan, you're more likely to achieve the goal. So, creating a culture and creating, really a culture of expense reduction is important, right? So many organizations, it's just not a topic of conversation, especially when times are good. right? And
Yeah.
profits are increasing or growth is happening. And then all of a sudden, things go down or the market goes down. And then it's this huge focus on expense reduction. Well, where was that focus previously, right? So it's not embedded in the culture.
And
Um,
empowering your staff to draw attention to places where you can save, rather than it always being the focus of just your CFO,
right.
or even your accountant or your bookkeeper to do that. Because a lot of times your staff is in the best position to identify those places where you could save.
No doubt. And I think just knowing that, a lot of people in their mind think price reduction or less cost, less quality. That's not the case. And we just don't
Yeah.
see that when they're out there. There's the ability to control costs and lower costs without sacrificing quality, but it just takes having a strategy, right?
Yeah.
So that's step one. Step two is you have to understand your purchasing history to really have, excuse me, press the wrong button there. There we go. You have to understand your purchasing history to really be able to effectively manage your expenses. So whatever that method is, however you go about understanding and analyzing and tracking your purchasing history, it's important that you do that process. What we see in a lot of organizations is they'll have the one item purchased through sometimes 4, 5, 6, 7 suppliers, right? So really what's happening there is you're taking your purchasing power as a customer and you're diluting it, right, across suppliers.
Yeah.
And ideally, you want to come to one supplier with the most purchasing power to get you the best price, right?
Yeah.
So, so it's just important that you have a system in place to do that, to analyze and understand your purchasing history.
It's important to have a system in place to record your purchasing history. For those really small businesses, who maybe aren't using something like QuickBooks or what have you, you really do need some sort of system that you're tracking, that you can report, have that profit and loss, and be able to analyze that.
Yeah. Even if it's as simple as your GL detail, right? Looking at
Yep.
your GL detail occasionally, or if you have an accounts payable report, right? Just
Yep.
taking the time as the business owner. You may not have a CFO, you may not have a controller on site, but just taking your time to look through that occasionally and understand, okay, how much am I spending my vendor? How
Yeah.
many different vendors am I using to get the same product, right? Those kind of things are important to do.
Yeah.
Define qualitative needs. So, as we mentioned, it doesn't always just come down to price. There's other requirements for certain supplier-based expenses. But do you understand what those qualitative requirements are? From a service perspective, what's important to you? What are you looking at from X supplier, from your waste supplier, from your insurance provider, from your office supplier, right?
Yeah.
What does that look like? Because it's not always just about price, and you have to understand those.
Yeah, but if you don't stop and think about it, you could find yourself chasing that next shiny thing, and purchasing, from organizations, or even, buying subscriptions or whatnot that you maybe don't actually need, but you didn't really stop to think about, do you need all those bells and whistles?
Right. Right. Or at getting yourself in a situation where you think you're improving your situation and you actually are making your situation worse. Right.
Yeah. Yep.
So we've all done that before, where we switch a supplier because it's a few cents cheaper, a few dollars cheaper, and we end up in a worse position than we were before. Right.
Yeah. Yeah.
So,
'Cause the service just isn't there.
right.
Yep.
Right. So that's important as well. Do you understand your buying assumptions? Many of the assumptions and processes that drive supplier requirements are not valid, appropriate, or necessary. So basically, has anything changed in how you purchase or how you utilize that supplier over time? And just because you based your contract or your relationship with a certain supplier over what was the case 2 or 3 years ago, has anything changed within the business, right? Has your requirements for waste changed? Has your requirements for insurance changed? Has your business changed, right? So maybe the same coverage you had for general liability or workers' comp or health insurance, whatever it may be, is no longer valid based on where your company is today. So make sure you really understand, your business to be able to evaluate those supplier relationships and how things change. All right. So this is where it gets a little more, I don't want to say complicated or technical, but this is where I think a lot of folks have trouble, right? Really understanding suppliers and their industries, because, let's just face it, most of the time, small business owners, folks in small businesses, even mid-sized businesses, they just don't really have the time, right? They're so ingrained in their business that they don't have the ability to know their suppliers and their industries and their businesses as well as they should, to be able to effectively get the best outcome in their supplier relationships.
Yeah,
So,
that's a really good point. Yeah, it's been really interesting. Some of the different business owners that I've met, and one of the great questions to ask them is, what are the questions your customers should be asking and aren't?
right.
Because that can be really fascinating, especially when it comes to insurance. There are lots of insurance agents who will just sell the same policy to everybody.
Yep.
But when you really understand what's in it and what you do and don't need, that can drastically change your price and the kind of coverage you have.
No question. No
Yeah.
question. So yeah, so it's critical, right? To really attempt to understand their business as a supplier, understand their industry, what's changed in their industry, especially if you're evaluating, one of your higher cost category relationships with a supplier, right? You really want to attempt to understand that before you dive into any type of negotiation, contracts, agreements, negotiations with them.
Yeah.
Just the items that you would want to understand, what are the market trends in that industry, any new developments, alternatives, when you're having a conversation or if you're putting out an RFP, do you understand the terminology and jargon? So, that supplier, that industry is going to know that about their business, right?
Yeah.
Obviously, the reason that a lot of businesses are overcharged and that we're able to see 20% on average is because, suppliers know that most businesses don't know their business as well as they should, right?
Yeah, I have seen some RFPs with some really wild questions in them that, yeah, it just drives home the point. They have no idea what they're asking about.
Right.
Yeah.
I agree. And the second to last bullet point here, I think, is really important. Pricing benchmarks for similar companies. Because if you're just utilizing your current supplier and whatever their current price is, and you're able to negotiate it down by a few percentage points, and you feel like you got a good deal, well, how do you know where you started as a pricing, benchmark was the appropriate benchmark? Or, if you just pick up the phone and you Google and find 2 or 3 additional businesses or suppliers that offer the same product, and you call upon them and get quotes, well, how do you know that they were the best suppliers for what you needed and that their pricing is a benchmark, right? So it's a really difficult thing to understand where the benchmark should be for pricing in a supplier industry. So that's something I think where a lot of businesses tend to fall short. And that's an area of expertise that we have within ERA. Obviously, we've been doing this for 30 years, so we have 30,000 projects worth of benchmark data to be able to say, okay, office supplies in this market, it should be X price, right? And that's really where working with a specialist really helps.
Yeah, because that can be really tough information to gather. I'm a big proponent of people belonging to their industry trade associations or having some way to interact with other people in their industry who might otherwise be their competitor, but maybe in a different geographic area, so they're not actually your competitor anymore. And they can, you can share a lot of really valuable information, but especially when it comes to pricing, that can be a sensitive area.
Yeah, that's a great point, Cheryl, on being a part of different associations and trades and being able to have that open dialogue with others about an industry. So
Yeah.
great point there. And then, do you understand the differentiation, right? There's not a coincidence that word is the most bold and capitalized on this on the sheet here. What's the differentiation among that supplier? What makes them different from their competitors? That really truly helps you to understand that supplier.
Yeah, these are great. Mike, thank you so much. This is really helpful.
Oh, of course. Yeah, no, thanks for having me on here. It's fun to go through this, right?
Yeah.
So
Yeah, it makes you stop and think about things that otherwise it's just part of your daily routine, and you don't really stop to question it.
yeah, No doubt. I mean, it happens all the time, right? That's why I think it's important to present these topics. Folks who just don't have the time to think through these things. So
Yeah.
good to bring it top of mind. The next status after you've done those first 5 steps and you really have a good understanding of all the information you need to kind of get ready and to approach cost reduction in your supplier base, the next thing is to really put this into action. So that's where we are. So now what do you do? Next thing is you go to market, right? So you feel like you have all the background information, you understand your suppliers, you understand their industry, you understand your internal data and your purchase history, and you're able to go to market. And typically this would look like an RFP, right? When you're looking at larger expenses or larger supplies. If it's a small category, maybe you'll just call a few vendors and you'll bid it out and see where you compare to others in the market. But that's the next step, is to put this data and this information into action and see if you're able to improve your supplier situation.
Another idea popped into my head that wasn't on here, but maybe should be or could be, is again, with those trade associations and other organizations that you can join as a business, sometimes there are discounts available because you're a member. And so it's always a good idea to periodically review your benefits of membership in whatever it is you're a member of, to see, are you taking advantage of all of those? And that could factor into this as well.
Great point. Yes, it could. Yep. And, there's GPOs as well, right? Group purchasing organizations. Some folks are a member of them. Also, just be careful with those. I think a lot of times folks think, and we'll go on to this on another slide, a lot of times folks think that GPO means the best pricing. And it's just, in reality, that's not always the case, right? And I think sometimes that gives people a false sense of security. Oh, well, I'm in a GPO, right? I don't need to do these things or go to market, but you do. You do.
Makes me think of a timeshare.
Yeah. All right, so what's next here? I have a quick trigger finger here. So the next is negotiate. So now that you have all the information and you really know pricing, terms, supplier behavior, help the supplier to save money, right? And what that means is make sure that you have all the information that they need, that you're really a partner in the process. And I think a lot of folks go wrong in this step, where they take on a more of an adversarial relationship with the supplier, and it becomes almost adversarial. And I think in that situation, you never get the best result. I always look at suppliers as partners. I think it's always best to treat them as partners, and try to make sure that they come out of it with a win-win solution. And it's funny, taking that approach, you always get the best outcome, right? I think a lot of folks feel like if they beat up the supplier, they're going to get the best outcome. But from what I've seen, that's not really the case.
You get more with honey.
That's right.
Yeah,
that's right. It's a human on the other end, right?
Yeah.
They're trying to do their job, and they want to work with people that they feel good about working with too, right? It's a partnership on their end too. So
absolutely. And how many of us have not come face to face with that person who is questioning our prices and why we charge what we charge, and insisting that it's too much when they really know nothing about what it is that we're doing and the value of it. So, it's always good to approach that conversation with a level of professional respect.
No doubt. No doubt. And that at this point, so you've done all your research, you've negotiated your new pricing, you have new proposals, new agreements at your disposal. So at this point, it's time to take action. It's time to put that information into place. It's time to choose the most effective new option for your business, and to move somewhat quickly at this point, because you feel, if you think about it, right? Every day, and in some cases, this could be significant reduction in cost. Every day that process drags on, whether you're getting other stakeholders involved or multiple level of approvals, that's money lost each day, right? So obviously, you don't want to make hasty decisions or not make good decisions, but it's important to act on this information. And a lot of times, proposals and agreements have windows where the pricing is valid only for a certain amount of time. So it's not something where you want to gather all the information and then revisit in 6 months. you want to kind of get moving with the process and move towards implementation quickly.
That's a great point. I think that's one that people really don't stop to think about very often. But yeah, taking too long can actually cost you a lot of money.
No doubt. No doubt. And then, at that point, the process isn't over, right? You have to monitor as well. We've all seen that something's agreed upon today. You get an invoice in a month or two. Maybe you quickly just, sign it or stamp it and send it to the bookkeeper or accounts payable. And then next thing you know, you've been paying an invoice that's been incorrect, right? So it's important that you make sure that you monitor invoices after that point, and that what you've agreed to, is carried out for the life of the agreement. There's so much leakage that happens just in errors.
Yeah, that's a good point.
Mm-hmm.
And make sure you've read the small print too, especially when you're agreeing to a contract. Make sure there's no balloon or hidden fees that are going to show up after that introductory price. That can really catch people out too.
No doubt. That's very true. So we touched a little bit on culture a few slides back, but finally, just making sure that after you've been through this process, that this is an ongoing part of the culture of the organization moving forward. So, just making sure that each stakeholder within the business, and Cheryl, I think you mentioned this, is empowered to look for savings, is empowered to find alternatives that make sense, that might be at a reduced cost, is empowered to go through this process and evaluate their supplier relationships and really treat the money that the organization spends like it's their own, right?
Yeah.
Sometimes, organizations, they just have really one person, whether it's a CFO, the controller, the general manager, the owner, and they're the decision maker for everything, right?
Yeah.
The supplier relationships, pricing, what vendors you work with. And that just really prevents a culture of expense reduction to really take off within the organization, right? You want everyone to be empowered to think like this and to take action. So.
Yeah, absolutely. And, kind of switching my own mindset to some of the larger companies I've dealt with as opposed to the smaller ones, I think that often puts them at a disadvantage. Small companies can pivot and adjust very quickly to financial changes and market changes that will influence those. But I can't tell you how often I've seen large companies that they put together their annual budget, and there's that mad rush at the end to spend money so that you can get the budget you had last year, and you got to really question some of those processes that you have embedded, and are they actually harming you more than they're helping?
We've all seen that, right?
Yeah.
Use that last 50,000, or else you're not going to have it again next year, right? But how responsible of an approach is that?
Yeah.
No doubt.
Yeah, and I feel like that is as much a cultural issue as it is procedural.
Yep. Agreed. So just a quick overview here. So developing a strategy and plan, analyzing your purchasing history, understanding quality and service, and how that relates to your supplier relationships, what assumptions and processes you have in place, seeking to understand your supplier's industry as you would your own, reevaluating those supplier relationships, going to market, negotiating, and implementing and monitoring, and then making sure that there's a embedded cost control mindset in the company. As an overview for the 10 steps.
That's fantastic. This is so helpful.
Great. And then, so what do suppliers not want you to know? So these are really things that we have found to be true over many years. That may be a little bit counterintuitive to what you would think. So suppliers don't always give the same pricing to similar clients and customers. Sometimes for a variety of factors. A similar client or a similar profile may have a vastly different cost profile just because they can, right? So that's something that you may not think of. I think a lot of folks think that supplier loyalty will translate to complacency and allow margins to increase. Supplier loyalty can translate to complacency and allow margins to increase. So I think conversely, a lot of folks think that supplier loyalty is the way to get the best pricing and, the best benefits for the business. A lot of times we see that the longest term supplier relationships correspond to the highest level of cost savings opportunity. Just because, I've had X supplier that stops in every Christmas and asks about my family and gives me a Christmas gift, and they're so nice and they take such good care of me. Meanwhile, I've taken my eye off the ball to the 5% increase in cost that's happening each year to my account. And now I'm exceeding market rate by 35%, right?
Yeah.
And
Yeah.
those things happen.
Yep. Or those discounts that are only available for new customers.
Right. Right. No question. We talked about this a bit. Strong arming suppliers may lead them to start with higher pricing, right? If they think you're going to be a difficult customer or someone they may not want to work with, they may start at less optimal pricing than if they said, hey, this looks like an account that, is really going to work well for us, that fits our profile and is the kind of business we want to work with. They may come in with more aggressive and optimal pricing in that scenario. So strong arming, like we said, is not always the best way to go.
Yeah, I've known plenty of businesses that, the second they feel like a customer might be a difficult one or might be one that's going to try and drive a really hard bargain, they immediately increase all prices by 10-20% so
Right.
that they can make the customer feel good that they got a deal. And I hate to say it, but I've seen that also play into some cultural issues where certain demographics may be known for negotiating or bargaining, and understanding kind of some of those demographics and the mindset that the supplier may have can really arm you with some better tactics going into the conversation.
True. That's true. I think this is a broad category, but technology improvements is kind of where we start here. May lower our suppliers' costs, but they may not automatically pass this on to the customers. Also, what we're seeing is, inflation has inflated prices across the board. We're starting to see some easing in some inflationary pressures in certain categories. But what we're also seeing is that even though there's a drastic downturn in the supplier's costs, they're not necessarily passing on those savings to the customers, right? So if you don't have that knowledge, it's hard to extract those savings from the supplier.
Yeah, a well-timed, well-worded question could make a big difference.
No doubt. Yep. Contracts, obviously, there is something to be cautious of as far as, they can get you lower pricing, but they can also lock you in a down economy. As we talk right now, there's certainly some aspects of our economy that are leading to higher costs. If you look at a long-term agreement that could lock you in at current rates that are maybe a bit inflated, although those prices may be lower now, how's it going to look in 3 years, in 5 years, in 10 years, right? Are there ways to give yourself an out in that contract? Auto renews are something that we should all be aware of and keep an eye out for. They're in so many contracts. So if you're not able to get those out of the contracts, just making sure that you're going into your calendar and you're marking your calendar for 90 days prior to the auto renew clause. And whether that's something very easy and basic that a lot of folks just don't do or miss.
Absolutely. I can't tell you how many years I spent calling the cable company every 3 months, every 6 months, whatever the term of that last deal was, because inevitably, if I didn't call, my price was going to double. But if I called, there was some new deal to be had.
That's right. Right. And they just assume we're all busy. We're going to take our eye off the ball.
Yep.
Right? Which many of us do.
Yeah.
We talked a bit about GPOs, group purchasing organizations, or national price agreements. A lot of times folks are lulled into thinking that, hey, I'm in a GPO or an MPA. I don't have to worry about cost reduction or price reduction or evaluate my suppliers. I'm getting the best pricing. Well, we don't see that to be the case in a lot of scenarios. So even though you're in those group purchasing organizations or national price agreements, you still need to go through this process.
Do you find that sometimes they're the right choice? Is it something that's worth an evaluation?
Yes, and I think it's a two-prong approach there. Yes, you can be in a group purchasing organization or in a national price agreement, but you still have to go through the process of price verifications and invoice monitoring. And you can't completely take your eye off the ball when it comes to expense management just because you're in that program, right?
Yeah.
You still have
Yeah.
to be diligent. And sometimes it's not the right GPO for you, right? There may be
Right.
another available, right? So yes. And then finally, I think this is true for any business, regardless of size. Every invoice should be reviewed for accuracy, price fluctuations, understanding all ancillary fees. If you don't understand an invoice that you're receiving, take the time to call the individual or get with your account rep and just ask for a 5-10 minute review of the invoice so that you understand it. So that the next month you get it, you're able to effectively go through and validate that all the pricing is accurate, right?
Yeah.
One category that comes to the top of my mind is merchant processing. I don't think maybe 5% of businesses actually truly understand their merchant processing invoice. There's so many different fees. There's so many different line items. Folks just pay it, right? They have no idea what they're paying. There's fees snuck in there. They don't even realize it. Same thing happens a lot of times with facilities, a travel charge, a fuel charge. Oh, I don't remember what my agreement stated. If they're supposed to charge me these or not, they won't question, right? So you gotta be diligent.
I'd like to take a moment and just remind everyone of that very first slide, where you were showing, how much of a cost savings you can get and how much more revenue you'd have to have in order to increase your bottom line. Because I feel like at this point, looking at all these steps and all this information, it feels like it'd be very time consuming. But you really have to ask yourself, well, how much time is it going to take to pay attention to my costs and get better ones? And how much time would it take to increase my sales by that astronomical number in order to get the same bottom line answer? And I feel like odds are it's probably going to take you more time in sales to reach that number than it's actually going to take you in analyzing your costs.
Yeah. And the other thing is, can you do both? Right?
Yeah.
Can you embed an expense reduction culture and still focus on top line growth? Right. That's the ideal scenario, right?
Yes.
So, all right, business challenges. So these are some of the challenges that businesses face when it comes to this process. Is they have multiple suppliers, multiple order points. They have no benchmarking data. We talked about how important that is, and when you say good, or I think I'm good in this area, or I think I'm doing great in this area, when it comes to supplier expense management, well, what does that look like? How do you benchmark, or what KPIs do you have to know that you're doing well? And a lot of times that's where folks can't answer that question. Common staff and management have limited time. Employees with limited buying experience are left making buying decisions. They're not procurement professionals. They're a specialist in either leadership or their area of expertise within the business. They're not always, adept at going through this process.
Yeah.
Here's just one opportunity to share. So this was a manufacturing client. They had $901,000 in MRO. Or excuse me, they had savings of $901,000 in the MRO, which is manufacturing, repairs, and operation. $235,000 in general, $510,000 in oils and lubricants, $156,000 in furnace belts. So this just kind of goes through an example, and obviously this was a larger business that we've worked with. They were on the manufacturing side, but shows you all the different various areas we were able to deliver savings, and how impactful this process can be in a business when you bring in someone that's an expert in these areas.
Yeah, that's huge.
All right, so just to summarize, so RFP best practices. The first thing is to plan, right? Analyze the current spend, understand contracts, understand the market, decide if it's a situation where you want to go out to RFP, or you may just need to negotiate, right? If you're currently under contract with a supplier, that doesn't mean that you can't go through this process. A lot of times what you may be able to do in that scenario is say, okay, I know I'm under contract through 2025, but in exchange for X additional years, I'd like to revisit some price decreases now in the short term, right? And it'd be incumbent upon them to consider doing that. If not, what's going to happen at the end of the current agreement? You're going to likely move on, right? So a lot of times businesses are willing to do that. And certainly define and weight the requirements of what you need. Execute an RFP, be clear, be understandable, have specific data, forecasted volume, any questions you need answered, price lists, include any non-price factors, any qualitative factors, service related factors. Capture the total cost. Is there any cost in switching vendors, delivery charge, volume discounts, rebates? As we mentioned, treat suppliers fairly, but I think the main thing with an RFP is make sure that you're sending the same set of qualifications and questions to all your suppliers so that you truly have an apples to apples comparison that's going to allow you to make the best decision. And then analyze, score the responses, evaluate alternatives. Sorry, Cheryl, 1 second here. So sorry about that.
Okay.
Yeah, and really just like we said, make sure that you analyze all the responses, negotiate as needed, and then the most important thing is decide, make a decision, and implement. So this is the continuum of expense management. Basic would be you have no understanding of spend, no competitive bidding process, no review of invoices. That would be the lowest end of the expense management continuum. Better would be you have some market knowledge, basic contract details, and you manage your core expenses, right? Great would be using competitive bidding, spot checking the invoices, really having a process in place for expense management. And then exceptional would be you manage all expenses, you're analyzing regularly, you're tracking and measuring savings, creating competitive tension with suppliers, obviously in a respectful way, and then cultivating supplier relationships. And I think what's very important is monitoring every invoice as well. Okay.
So when somebody works with you to help with that expense reduction, what does that look like? Is that, an ongoing continuous process? Is it a one-time thing? Is it periodic?
Yeah, so it varies. So for us, any expense category that we would review, we're on board for 24 months. So from the time that we go through everything that we just talked about today and we implement, we stay on for 24 months to make sure that carries out throughout the life of the expense reduction process, that whatever the expense reduction that we've committed to that client is realized. So it's 24 months per category. Most of the time we're averaging about 4 to 8 different expense categories. So the process altogether takes anywhere from 2 to 4 years. By the time we get to the end of the process, if folks don't have the ability to do this internally on their own, they may ask us to stay on there. They may ask us to go back and do it again. So it varies very much from a one-time multi-year engagement to sometimes we've had clients for 10 to 15 years.
Okay.
So it very much does vary.
And what's kind of the right size business to go from trying to follow these steps that you just gave us today on your own versus having experts come in and help you go through and do it? Is there a minimum size business that kind of passes that threshold?
Yeah, we tend to work with businesses typically about 10 million or more, but that's not to say that we can't help those that are smaller. It's not necessarily a matter of top line revenue, and more so a matter of the quantity of the individual expense category, right? If
Right.
there's enough meat on the bone there that, let's say we save 20%, if that's impactful for them as a business and impactful for us, then it can work. So there's plenty of times that we work with smaller businesses as well.
Okay. All right. Good to know. Anything else we should know for someone who's listening to this who is interested in your services? Anything else that they should know before they contact you, or
No,
basics on how it works?
I think the main thing to know is that, I think this is a good process for anyone to go through to review their supplier-based expenses, and whether, we come on to help or not, I think it's an impactful process to go through. There's two outcomes that can happen. Outcome one will be, we can give a look at your general ledger or your accounts payable and say, you know what, Cheryl, you're doing a great job in all these different categories. That's important to know, right? And then there's no fee for what we do, and there's no engagement, but you're doing well in these areas. And the second outcome is we'll be able to review those expenses for you because there's enough meat on the bone, and it's found money, right?
Yeah.
It's money that you didn't have previously, and we simply share in a portion of those savings. It's contingency based. So I think that's important to know for folks. And we're happy to look at any vertical, any size business, and worst case scenario, it's not a fit, but there's no bad conversation.
Right. So you're not limited to any particular industries, and just to kind of restate in case it wasn't clear for anyone, there's not actually an upfront cost for your services. You guys share in the cost savings that you manage to find for people.
Correct. Right. 100%. We say success based or contingency based, and we just simply share whatever we're able to uncover. So.
Yeah, that's fabulous. That lowers that barrier to entry. Absolutely.
Right. Right.
Is it just U.S. businesses? Do you work internationally?
No, yeah, we're actually the largest cost consultant in the world. We're in 44 countries. We're based out of the UK, so we work, throughout the world. So there's really no barriers.
Okay, fantastic, Mike. Thank you so much. This was really, really good, helpful information, I think, for any size business.
Well, thank you. Thanks for having me. It was fun to go through it, and thanks for your questions as well. I thought they were, and comments, they were great. So thank you.
All right. Thanks. You have a good one.
All right, you too.
Bye.